Now, Statistician General Risenga Maluleke has announced that the GDP for the second quarter of 2022 decreased by 0.7%. We continue this afternoon getting some reaction on this. I'm joined now by the General Secretary of Saftu, Zwelinzima Vavi. Mr. Vavi, good afternoon. Welcome to today and eNCA. Thank you very much for your time. Just an overriding question first. What's your reaction when you heard the numbers that yet again the GDP has contracted?
Well, nobody can be surprised in South Africa anymore. We are trapped in a situation where our growth is either growing by 1-2% or declining by 1-2%. And this has been going on since 1994 breakthrough. And no, it has happened since after the 2008-2009 crisis. And we blame in the main the absolute adherence of our government, its determination to continue holding the line imposed on them by the IMF, World Bank rating agencies that says that the current growth path we find ourselves in is the correct growth path and that they must continue adhering to the dictates of completely inappropriate, in our view, inappropriate macroeconomic policies that we blame for reproducing unemployment, poverty, inequalities, that is trapping our GDP in a stagnation, and that leads to more of the people not getting employment opportunities, and leading to a situation where our country becomes the holder of three titles. One title, the worst inequalities in the world. Second one, the second worst unemployment amongst industrializing countries or industrialized economies. Thirdly, the worst youth unemployment in the world. And but government is refusing to listen to any other view other than what it is getting from the IMF, World Bank, and the rating agencies.
You are pointing a finger at government and the policies that you say are not conducive to create economic growth. But what is the role of labor? How do you respond to some critics who say the demands of higher than inflation wages and the strike actions are driving investors away?
I don't think that criticism is correct. The crises we are facing in this economy are structural. They have to do with the fact that our economy remains a colonial post where firms, multinational corporations, mining companies in the main, are invited to participate in this economy to extract in the main the minerals, raw, send them out of the country, raw, beneficiate and build secondary industries in the former colonizing headquarters, and increasingly China now, only for those to be sent back to South Africa. That's what is in the main the structural problem that we must break out of. And secondly, there's an investment strike. And there's an investment strike by both the private sector and the government. Government has, since 2008, in response to the world economic crisis, been imposing what we call the austerity program, the budget cuts, and the levels of investment of government, in particular in the infrastructure, are way, way below what can help us see greater levels of economic growth in the economy. That's your problem in one hand. The second problem in one hand is that the private sector too are in an investment strike. And that is demonstrated and underlined by the fact that the tycoon class in South Africa is sitting on a 1.8 trillion rands, which they are holding, that they will not invest in the economy. And we imagine that if they were forced through what we call a solidarity tax or wealth tax to invest that money in the productive sectors of the economy, we can realize greater levels of growth. So the overall investment in the economy by both private and public sector is sitting between 16-17%, which is actually the real reason why we are finding ourselves in a stagnating growth. Growth If that was to be pushed towards 24%, 25, 26%, then this economy will see a 5-6% growth and compete with other economies elsewhere in the world.
Thank you very much for your time and your reaction to the GDP figures this afternoon. That's the General Secretary of Trade Union Federation, Saftu, Mr. Zwelinzima Vavi.